Hey everybody, so I know we're all going through a lot of stuff right now with this current crisis and this COVID-19. It's disrupted a lot of lives, certainly at the employee level, at the business level, and at the government level. So, I think it's a great time. I did a video about financial stress test, but I also wanted to do a video which I'm calling, what's your financial direction? And where do you want to go? Because I know a lot of people right now are hurting financially and they need money, but there's a reason for that. And hopefully this video helps a little bit of you guys so that you can kind of make some little bit better decisions. So one of the things that I love to talk about at Rich Dad is called the cash flow quadrant. And so for any of you who have never seen this, it's called ESBI. And this is taught a lot about at Rich Dad, and it's also in a great book called The Cash Flow Quadrant. In fact, it's the second leading book in sales behind Rich Dad, Poor Dad. It's a very, very, very good book. And essentially what this means is that if you're in this category, you're an employee. If you're in this category, you're self-employed. If you're in this category, you're a business. And in this category, it's an investor or investment. And so we're going to talk a little bit about what category you're in. And once you kind of identify where you are, then it's easy to try to figure out where you want to be. Because essentially you want to be either on the business side or the investment side. And what you want, rule number one in Rich Dad, Poor Dad, rule number one is the rich don't work for money. And that's because the money that we make in our either employee or self-employed or business is invested over here, and then it generates enough passive income for us to be financially free and pay for all our bills. In other words, we're not reliant on another sale or a commission or a job or a salary or an hourly wage or a stimulus check or anything like that. And that's where you want to be too. So now I'm going to go through the differences of each quadrant for you, and you need to identify which quadrant that you're in personally. So here's generally what happens in the employee category. Now, I was an employee right out of college, and as you guys know, college basically prepares you guys to be employees, so it's okay. Most people get out of school, they're looking for a job. Unfortunately, right now, here it is May 2020, where a lot of kids just got out of high school and a lot of kids just got out of college, and they come into this workforce right now. We got 33 million people unemployed. Who knows how many are going to go back? But we're certainly going to have a very high unemployment at some point. So these people are generally going to be looking for employee jobs, which there's not going to be a lot of. And so they're probably going to have to start looking at kind of self-employed, et cetera, et cetera. Typically, if you're in the E category, you're looking for something that's safe. So that's the first one, and you want to be comfortable. Nothing wrong with that. But a lot of people hang out right here. They want to go to work, they want to get their paycheck. This is the category right now that a lot of people are in trouble in right now, because a lot of the businesses that they work for, either here or even sometimes here, aren't able to pay them because everything's shut down and there's no money. So if money's not flowing from these three categories, it's certainly not flowing from here. And typically, these people are, I would call them a 9 to 5, okay? Nothing wrong with that, but that's what they are. They're not doing a lot after that. They work for the weekends, et cetera, et cetera, et cetera. It's basically a mindset. Nothing wrong with it. But a lot of times people right now, I think, are going to have to move into the S category, which is, self, specialist. These are things like doctors, like dentists that have their own practices. The problem with this category, this could be a real estate agent, an insurance agent. This is what I call the eat what you kill model. So basically, as long as they're working, they get money. Now, some of these people make a lot of money, But the point is, unless things are selling, unless there's commissions, unless they're fixing teeth, unless they're fixing people, unless they're selling insurance, they're not making any money, okay? And so there's a lot of people that go from employee to here, and that is a very, very good step. Because a lot of times, I think what we want to do here is we want to move through the quadrant like this. In other words, a lot of employees then become self-employed or a consultant. That's another category that I think a lot of people, this is a consultant. And you're only as good as whatever work you have in front of you. And so some of you are working all the time. Some of you have years of work ahead of you. Some of you have no work ahead of you, etc. Nothing wrong with this category, but I think with all this crisis, what's going to happen is we're going to see a lot of people default into the S category. We're going to see a lot of kids that are coming out of high school, coming out of college, and we're going to see a lot of people that just got disrupted, that are going to be looking online for ways to make money and ways to do things and create service businesses and things like that. I think it's going to be a fascinating and wonderful time. Again, there's nothing wrong with this category. There's one big problem with the S's, especially when it comes with the lawyers and some of the independent CPAs. They have big egos. Big. And so this keeps them small because they think nothing can be done except if I do it. They don't like to delegate. Everything that needs to run through them. So I see this all the time, and you see this all the time in businesses that maybe they do very good work, but they can't take on any new clients, for example. Or maybe the customer service is very poor because they don't care because there's going to be somebody coming in right afterwards. Okay, so typically they're working a lot, and these people, they could be working 60 to 80 hours a week. These people are working 40 hours a week. So that's generally, so these people are working a lot. The problem is they think, again, everything needs to run through them, and they're not leveraging their time. So the thing about money is just a claim on your time. And so the big difference between here is these people are working 50% to 100% more. And so a lot of times people make the jump from E to S. And the reason that some of these people with these big egos can't move forward is because they don't trust anybody and they don't think anybody can do it better than them. And so they never move into the B category, which is ultimately where we want to go, over to here. And that's to create a business. So let me give you an example. I have a friend who has a CPA business. Started as a lone CPA with several clients. And what he's decided to do is leverage that into multiple CPA businesses under a brand that he created. So he created his own brand, and then he started hiring other CPAs and created a whole back-end office for them so that the CPAs could still do what they want, but they were up under his brand. And then he took a percentage of their clients, and then he built this whole network of CPAs across the United States, and now he's going worldwide. That's the difference of somebody who's been a specialist to a bigger business. Same thing with my friend who started an ice cream store here in Phoenix, Arizona. And it started with one store and then 2 stores, and then he scaled it to big business to 1,500 to 2,000 stores called Cold Stone Creamery. And he scaled that to big business. And he sold it here and then invested his money here. And so that's the whole point. All of these businesses, whether you're doing massage, whether you're doing acupuncture, whether you've got a ice cream store, whether you're an insurance agent and you buy and you create a big business from that, you can do all of those things from here. But the difference is that most people have the big egos and they don't want to. These people are usually very, very smart. Also an S. They're typically attorneys, CPAs, et cetera, et cetera, et cetera. And so once you can move to the B category, which Kiyosaki describes as having over 500 employees, which is hard to do, but you can do it. Trust me, you can do it with the right teams. What happens is then the person in this B category, which is where I am right now, is I actually start to use some of these people. So I use attorneys, I use CPA, I use consultants, I use real estate agents, I use insurance agents, I use specialists. So over here, you have to learn how to build a team. And over here, no team. Most people want to try to learn how to go from S to B. How do you go from no team to team? And the big issue over here is trust and control. So for me, when I decided that I wanted to move to the B category, I wanted to be over here. I wanted a business that paid for my lifestyle and paid for all my employees, but I didn't want to have to run it every day. I didn't want to have to show up every day. I didn't want to have to do this 9 to 5 thing. I didn't want to have to work 60, 80 hours a week, because I started here when I first was an employee, then I started my own business, and then I grew it to here. The interesting thing is that these are typically your A students. These are typically your B students. And these are typically your C students. And so what happens is the C students end up hiring the A students. And so when I can hire these people, when I can hire the attorney, I can hire the CPA, I can hire the specialist, I can hire the insurance agent, I can hire the consultant, all to make my team and my business better and to make more profit for my investors, then that's the right way to do it. But what you want is to be able to just identify where you are in the quadrant. So the interesting thing is that most of the investments from the E's and most of the investments from the S's, well, that goes into the tertiary market or the paper market or stocks, bonds, ETFs, because again, I think in a large case, a lot of the times as an employee, the employer kind of takes over your investment philosophy for you. They say, hey, we're going to invest your money and we're going to match it and we're going to invest it through our investment advisor that we decide. Whereas the S, because of their ego, they don't want to ask any questions. They just turn their money over and they work their butts off and hope that it grows over time. And so what happens on the B's, it's been my experience, is that we're always trying to invest here. We're trying to figure out what kind of investments there might be so that we can return more money. So we want our investments to return more money, whereas these people are just turning their cash over and hoping that it grows over a long period of time. So there's a massive difference here. And of course, what you want to do here is you want to buy assets. And even more important right now, you want to buy assets that hedge inflation. Because with all the printing that we're doing, the right thing to do is try to find things that protect the dollar. And so you need to try to move out of cash into assets that hedge inflation. One last thing that I want to point out here, that what happens from a tax standpoint is that these employees are taxed 40%. Generally. So let's say you make 50 grand a year, generally you're taxed through FICA, SUTA, and all the other things about 40% a year. These self-employeds, they're about 60%. That the business is taxed around 20%, more for capital gains, and it has a lot of tax benefits to be in the business category. There's lots of things that I can do that are business related that are all covered here, that are legal, completely legal. And the coolest part about the investments is that your tax can be zero. So the reason why people in the I category can pay zero tax and have infinite returns like I have on my shirt is because when we're investing in these assets, they have depreciation. And that depreciation allows us to cover our taxable income so that we have zero taxable income. In addition to that, when we grow the value of that real estate and we go back to the bank and we get a new loan, it's called a cash out refinance, then we get that money too, which is also not taxable and infinite, because if I put $1 million into a property and I grow it to $4 or $5 million and I put a new loan on there and I get that $1 million back, it's tax free because it's a loan. It's not actually income because it's actually owed. It's actually in the form of debt through a cash out refinance. So I actually owe a payment on that loan to the bank, which is typically covered by my tenants. But regardless, I've got all my money back and I've gotten all this cash out tax-free. And so that's what we want to do. And that's the education that you guys are going to need in order to bridge this gap to get to the next level. If you're in any of these categories, you really should be considering what could you be doing if you were here? What could you be doing if you were here to move over to here? And how can you invest so that you can get your investment back tax-free and have an infinite return for the rest of your life, for when this next recession hits or this next virus or whatever the next adjustment period is in all of our lives, then you're in a situation where you have enough passive income where you don't have to rely on that government stimulus check and you don't have all the stress and anxiety and uncertainty and fear around the money issue that everybody's kind of dealing with right now. So thanks for listening.